Investment banking supports entrepreneurship and startups. Welcome to the Finance Fusion, your clarity code for complex finance fundamentals. Today, we'll decode how investment banking supports entrepreneurship and startups. Investment banking plays a pivotal role in promoting entrepreneurship by providing comprehensive assistance to the nascent enterprises. Investment banks offer more than just a financial transaction. They also give customers access to the wide networks, strategic advice services, and vital dynamic information. They are essential in helping business owners navigate the difficult procedures, including mergers and IPOs. It also helps the fostering the expansion and guaranteeing the fair dealings. Investment banking becomes an essential to startup succeeding by supplying exit alternatives, easing the capital infusion, and by establishing connections with variety of investors. It all encompassing strategy not only supporting the individual endeavors, but also adds to the dynamic and the changing nature of this environment. Number 1, capital infusion for growth. The ability of investment banking to provide vital money for startups to thrive is crucial to its support of entrepreneurship. Investment banks act as a middleman, connecting business owners with wide range of financiers from the institutional investors to venture capitalists. This infusion of funding enables startups to develop new markets, scale their operations, innovate, and investment banking plays a very important role in this. Number 2, IPO and exit strategies. IPO and exit strategies serve as a prime examples of investment banking critical involvement in entrepreneurship. The desire to go public frequently emerges as startups grow, representing an important turning point. Investment banks are essential to the underlying of these initial public offerings because they guide businesses through the complex process of going public and making sure the move to the stock market goes well. IPOs provide early investors with an exit plan in addition to providing more funding for startups, thereby reinvesting and fostering the entrepreneurial ecosystem. This approach adds to the overall dynamic and evolution of businesses' landscape in addition to fostering the success of the individual enterprises. Number 3, mergers and acquisition. The impact of investment banking on entrepreneurship is not limited to the field of mergers and acquisition. Startups frequently think about strategic merger or acquisition by larger companies or critical junctures. Investment banks are essential to the process because they make sure it runs smoothly, fairly, and benefits all the parties involved. Investment banks facilitate mergers and acquisitions that allow entrepreneurs to realize the value they have built while bringing in the fresh capital to this ecosystem. This dynamic process demonstrates the multifarious influence of investment banking on the course of developing enterprises, not just by facilitating the business evolution, but also by contributing to the overall energy and innovation within the entrepreneurial ecosystem. Number 4, strategic advisory services. Investment banks help entrepreneurs by offering vital strategic advising services, which broadens their function beyond financial transaction. Expert investment bankers offer valuable perspectives on market patterns, sector dynamics, and possible hazards. With the help of this advice, business owners can improve their decision-making, hone their tactics, and skillfully position themselves for a long-term success. Investment banks provide strategic advice services that act as a compass, assisting startups in making wise and better decisions as they traverse the difficult business environment. By doing this, investment banks turn into reliable partners and that support the strategic expansion and long-term viability for entrepreneurial endeavors by providing a wide range of knowledge which goes beyond pressing the financials. Number 5, access to networks and resources. Investment banks serve as a crucial intermediaries, giving businesses owners access to the vast networks and resources. Investment bankers use their wide network of contacts to help introduce important industry players, possible partners, their clients, and their mentors. This access creates opportunities for cooperation and growth. Moreover, investment banks frequently host conferences, events, and instructional materials that give entrepreneurs the connection and information which they need to build something very successfully. Investment banks are essential to improving the entrepreneurial environment because they operate as educators and connectors, fostering the meaningful connection and enabling entrepreneurs to succeed in the fast-paced industries. Number 6, risk mitigation and due diligence. In the world of entrepreneurship, risk reduction and due diligence are very important, and investment banks plays a vital role as protectors. Investment bankers that conduct through due diligence thoroughly assess as a startup growth potential, their legal compliance, and their financial stability. In addition to shielding investors from possible dangers, this close examination boosts the startup's reputation and promotes confidence among partners and stakeholders. Investment banks facilitate smoother transactions and create opportunities for future partnership and investments by guaranteeing openness and dependability. This proactive approach to risk management helps ensure the long-term viability and prosperity for a startup and its investors. Number 7, debt financing. For startups, debt finance is an important role of funding that is sometimes eclipsed by equity choices. Startups that work with investment banks can obtain capital without giving up control by issuing bonds or any other debt instrument. With this option, business owners now can maintain more control over their organization while being able to grow and innovate at the same time. Startups can mitigate worries about dilution associated with equities, funding by leveraging the debt markets to get more funds with fixed repayment terms. By using this strategy, entrepreneurs can increase their financial flexibility for a long-term growth and development by striking a balance between raising the financing they need and maintaining their autonomy. In conclusion, the symbiotic relationship between investment bank and entrepreneurship is one of the most driving force behind innovation and economic growth. Investment banks serve as a catalyst, providing financial tools, expertise, and network that empowers entrepreneurs to transform ideas into thriving businesses, whether through capital infusion or through strategic guidance or facilitating transformative transactions. Investment banking is the cornerstone in foundation of a vibrant and dynamic entrepreneurial ecosystem. As we navigate the exciting world of finance, let's continue to celebrate the essential role that investment bank plays in fueling the dreams and aspiration of the next generation. Our journey into this financial clarity doesn't end here. Explore our archive of videos, a wealth of knowledge just waiting for you. If you found value in today's video, give it a thumbs up. Subscribe for our future insights and share it with your friends. Remember, the more we learn together, the stronger we become. Thanks for being part of the Finance Fusion, your compass to financial enlightenment.